following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Grigas from Options Express.
Welcome back to the Option Block, and I hope all of our listeners out there had a good Super Bowl weekend. I'm sure the listeners of ours who are up there in the frozen state to the north, of course, Wisconsin, and in particular Green Bay, are celebrating quite enthusiastically. In fact, I'd be surprised if any of you are listening to this show right now, because I'm sure many of you are working off an extensive partying session last night, let's just say that, including quite a bit of cheese, I'd imagine. I am your host, Mark Longo, for this bizarre sojourn through the world of options. I am joined, as always, by the usual gaggle of suspects, starting off with Mark Greasy Meatball Sebastian. Mr. Sebastian, how are you doing? How was your Super Bowl weekend?
Oh, it was great. This is the option block. This is what we do.
I take it you are referring to your favorite commercial of all time, the M&M Super Bowl commercial.
Not of all time. My favorite commercial of all time was the one I was in for Murphy in the Morning and Q1. But this would take maybe a close third to those two spots. But yeah, no, it was that was an interesting commercial. It was interesting that it was Chrysler. That was the only thing that I was like, oh, okay, all right, Fiat. There you go. That was an interesting commercial. We saw for the first. I mean, this has to be. You couldn't swing a stick without hitting a car ad during the Super Bowl. I thought that was a big change from the last couple of years. I feel like there were a lot more car ads than there were in the past. What do you guys think?
Apparently, they were the typical Doritos and Bud Light ads that are. Mm-hmm. We had plenty of those, but it seems like I agree. Yeah.
And that voice, of course, is the man from the mountains himself, Uncle Mike Tusaw from Know Your Options Inc., as well as his fame on the Bass Fishing Channel. Uncle Mike, how was your Super Bowl weekend?
Oh, it was a great time. It was very inspired by how the Packers overcame adversity, and I'm not a Packer fan, full disclosure, but just the way that they have when Donald Driver's out, Charles Woodson's out, and they still stick around to win it after the guys faced 5 elimination games in a row, and they ended up calling themselves world champs. You got to take your hats off to the Green Bay Packers.
No thanks.
Take off
I shall take off nothing. I shall take off nothing.
No, sore loser Bear fans, come on.
I'm sorry. I'm sorry, but the entire state of Wisconsin was maybe the most ungracious winners I've ever seen in my life, which is contrary to what they're known for, but it really was about as classless a group of people as I've seen since the Stanley Cup.
Since the Chicago Bears 3 weeks ago bashing their starting quarterback left and right, yeah.
Yeah, no,
that was classy. All the Bear fans really rallying around Cutler the way that they did, yeah.
Mm-hmm. Well, I'm glad you noticed that.
Rounding out our round table today is none other than Big Tim Navabi from Options Express. Tim, how are you doing? How was your Super Bowl weekend?
I'm doing very good. Thank you very much. Unfortunately, I didn't watch 1 minute of the Super Bowl. I know that's something wrong there.
It's understandable considering you're a Chicagoan. There might be some pent-up anger there.
I will never root for the Packers or like the Packers. I understand what Tusaw said. That's very respectful, and it's very nice to hear. But, I just really had no interest in watching the Packers play in the Super Bowl.
Oh, see, that's a classy Bear fan right there.
I'm
So-
lucky. I'm a transplant to the Chicago area, so I'm agnostic in this debate. I really have no edge either way. I don't have any of the antipathy towards the Packers that people who grew up here and live and breathe it do.
Yeah. Just that constant smell of beer and cheese sausages, it drives me nuts.
You hit the cheese palace as soon as you get over the border every time you go visiting Wisconsin. That's your first stop, I'm sure.
The Cheddar Curtain.
My next line of business after I'm done with Option Pit is I'm going to go up to I-94 just over the Wisconsin-Illinois border, and I'm going to open the first cheese, sausage, beer, and porn shop all in one location.
You're hitting all the needs of the cheeseheads
Exactly.
in one.
I mean, if you've been up there, that's all they got there.
And now that all of our fans to the frozen north have been sufficiently offended, we shall right into the trading block.
The trading block.
And welcome to the trading block. This is the section of the show where we detail what's going on in the market today and what's caught our eye in today's activity. It was a generally mild bullish day today. The S&P closed up 8 points. The Dow closed up nearly 70. The NASDAQ closed up 14, almost 15 points. And the VIX cash closed up 0.37 points to close at 1630.
The issue is that, really volatility was down probably about, when you account for the change in price, I'd put vol down about 0.25%. The VXX is a piece of garbage, but if you want to see what, on an individual day basis, how volatility is kind of acting, VXX is a pretty good measure. And I think it was measuring down about 20 cents, right?
Well, let me pull it up and I can tell you. Down 0.44.
All right, yeah. Well, there you go. So that's about really where we were at.
Yeah, not too much really moving the yardstick today. It was financials seemed to be at the core of the rally for the most part today. We saw Lowe's coming out and beating estimates. And can I just say on a side note that there are too many freaking companies named Lowe's? It's really just annoying.
Wait, you talk about Lowe's, Cineplex, Odeon?
You got Lowe's, Cineplex, you got Lowe's in the financial realm, you have the Lowe's home builder, spelled differently obviously, but still it's just too much. They need really to be, all the Lowe's teams need to sit down and they need to just fight it out, and only one of them can have the Lowe's name. And the others can move on to something else. Perhaps maybe Tusaw is available. They can be the Tusaw firm.
We'll go public if we need to.
I like it.
So yeah, not too much really super exciting today as far as the financials. Financials doing all right as a result of some of that news, some of that good earnings. Probably some of the more intriguing news I saw today that just came out of the blue was actually announced after the Super Bowl, which is an odd time to break news of an acquisition, is that AOL purchased the Huffington Post. And it just continues their content buying spree. They picked up Engadget a few years ago on the leading gadget blog. It's done huge numbers for them. They picked up TechCrunch about a little while ago for millions of dollars, and now they pick up the seemingly unrelated Huffington Post, and they closed down 75 cents on the day because of it to $21.19. So people ask, what is AOL in this day and age when people don't need those CDs coming in the mail? They don't need to have their little walled garden. AOL apparently is a content portal, and they're spending big money towards that. I should go knock on their doors and say, hey guys, what are you doing in the
Well, maybe you can get yourself a keyword if you really work hard,
So they're throwing around big bucks to be in the content world, and it was an interesting acquisition. Mr. T, what did your commodities do today?
My commodities didn't do a whole lot. If you just looking across the board here, silver actually went up a little bit. We're still short puts quite a ways out of the money on those. Gold, actually, I have GLD down 1 penny, so not a lot going on there. One of the main commodities that I am seeing move, oil. We got oil down 2% on the March contract, so I think that it's just kind of some people coming back into the short market. I think that oil was kind of puffed up a little bit, for lack of a better term, or maybe it was maybe they ate too much good hearty Wisconsin cheese when all the Egypt news was out, and that was kind of puffing it up. I think just kind of pulling back a little bit. So in the commodity world, That's what we're looking at. One thing that an individual stock that we're looking at that we're in that we actually had to make a couple adjustments for some people on is Apple. We had an analyst upgrading Apple today, and so Apple actually closed above 350. Actually was at 353 for a little while, so we have clients in covered calls and collars at the 350, all at various levels between 350 and 370, just depending on strategies and where we got them in. So we had to make a couple of adjustments for the people at the 350 level today.
Hey, Mike, did you notice the volatility levels in Apple? I mean, it is at levels that I have not seen in years. It's so low. You know, the last time it got this low, we talked about buying a straddle, and that thing ended up being a 50% winner. I'm looking at this thing, and Apple trading 350, you can buy the March straddle with 40 days for around $20. That just seems too cheap to me. Am I the only one that feels that way? I mean, for all we know, Steve Jobs could die. The iPad could turn out to cause testicular cancer or something. There's all sorts of things that could happen, and that straddle is just really cheap.
I think so too. The one thing, and I'm going to address this we have a weekly strategy that I'm looking to put in that actually addresses that right now, but you'll have to tune into the strategy block to hear the rest on that.
I was just going to ask you something about the block. And so I guess I will defer it to the strategy block then. But
see, that's called a hook. That way, people are going to keep listening for the rest of this show.
I like that.
That's show business.
That's a sir. You're learning.
Well, with vol this low, I mean, you almost and I know you're going to bring this up, but I don't think long-term covered call plays make a lot of sense. Do you?
No, I mean it's no, and we're doing some things to it. We have some collars for February and March, but it's more of a collar play than a covered call play, and we have some things that we're going to do as a way of adjusting this to try and take advantage of some of this low vol.
I believe price-wise, we were looking at, I believe it was the 320 straddle a few weeks ago, and that was about $20 as well, wasn't it?
Yeah, it was the low it got was about I want to say $18 or so, $18.50, and even that is just insane. I mean, this is $30 higher. I mean, this is just. I feel like you almost have to buy this stuff. I mean, it's crazy.
Yeah, I tend to agree with just the outlook going forward on Apple. There is no clear succession plan. I love the fact that a very minor shareholder, comparatively, they had 11,000 shares put forward a demand for a clear succession plan last week. So we'll see if they actually articulate something over there, if they just keep, pushing people away. Apple tends to act as if they don't have a fiduciary obligation to their shareholders to specify how they're going to run that company going forward, and they clearly do. And yet they keep coming out and saying it's a private matter, and no, it's not. When people have shares of your company and you're a public company, it is the farthest thing from a private matter. And it's kind of interesting to see how they manage to maintain that veil of secrecy. Like I said, they run that company like North Korea, and that straddle is definitely an intriguing bet.
Cheap. It is cheap. That's something we're going to be looking at in the Pit Report tomorrow when at optionpit.com. I'll tell you that much.
I need a stinger for that. The Pit Report.
Yeah, I know.
And speaking of teases, I should have mentioned this in the open, but I forgot, and I will mention it now. We want you guys to interact with us, so feel free to call us on our voice number, our Google voice number, actually. It's 312-544-9356. Leave us a question. Leave us your hopes, your dreams, your fears, your weekly strategies for writing covered calls and short puts. And if it's interesting and if it's better than Sebastian, we will put it on the air.
Good luck with that.
Yeah, I think that's pretty much it. Unless you have anything else you want to throw in there, Tim?
Not too much. I'm kind of agreeing with Mike Tusaw about some of the movers in commodities. Cotton was a big one today on the upside. Hogs was doing pretty well. Wheat was doing pretty well. Some of the ones that got hurt were natural gas, crude oil. Looks like some rough rice, some corn.
I tend to prefer
that's pretty much it. I can go back and I'll go over some more of those in the Express block.
All right, and that's going to do it for the trading block, and we're going to roll right into Sebastian's favorite section, the odd block.
The odd block.
The Odd Block.
And welcome to the Odd Block. This is the section of the show where we highlight some interesting and or unusual options activity that's lighting up our tape today. And we're going to start things off with Baxter International, BAX. This one closed at $48.85, up 33 cents. And this name does about 6,000 contracts a day. Today they did about 32,000 contracts. Yeah, the bulk of the activity we saw today was in a large block of calls in August. We saw a trader pick up 17,600 of the AUG 55 calls for 77 cents. That was just in one block. The total on the day went up to about 25,000 overall. So a bulk of buyers and a bulk of buying activity coming in for these AUG 55s at 77 cents. This is a strike that had an open interest of about 1,000 contracts before this. So this is all new opening paper. This guy isn't rolling from any other strike or anything like that. He really is opening up on the AUG 55 level. And this is a name that really hasn't seen 55 since back in April of last year when they cut their earnings, and the stock's been kind of moving downhill ever since. And so, yeah, this is an interesting one. They have earnings for Baxter coming up in mid-April, so not for a while yet on the earnings here, but an interesting name and a large out-of-nowhere block coming in, and the kind of thing we like to detail in these smaller names.
I've been noticing that a lot of these drug stocks have been kind of near these lows. I mean, I think we saw Abbott get smoked the other day, and, you know, we've seen several of these drug stocks kind of get near bottoms, but and relatively low vols. I mean, Baxter vol's not exactly skyrocketing high, so there might be an opportunity there, you know?
Yeah, that's why we like to highlight this one. It's a small one. It's the kind of name where it probably does indicate some serious opening bullish interest here, and it's not just someone rolling another position or doing something else that is relatively intricate. If you want intricacy, wait till the next one we'll bring up. It's kind of a bizarre one. Yeah, so that's Baxter. If you're trading Baxter, keep an eye on this. A large number of these AUG 55s going up. So it looks like people are expecting some upside, about a 13-14% rally they want, or they'll need by August expiration for these calls to break even. Then we're going to move on to Sebastian's name of the day, BPOP.
Buy Popular. Gotta love them.
Popular Incorporated, BPOP. I love that ticker. That's just fantastic. They closed at $3.53, up 18 cents. This is a name that does about 4,000 contracts a day. They did 42,000 today, and we'll get into some of those numbers and how they might be a little bit screwy. You know, we receive a large number of submissions and authors sending us unusual activity throughout the day at the Options Insider. It's one of the nice things about doing this show. I have a lot of the juiciest tidbits of the market to pick from on a regular basis. I don't have to.
That was another one of my nicknames in college, was Juicy Tidbit.
Juicy Tidbit? I thought you were going to say BPOP.
No, it was Mark Juicy Tidbit Sebastian.
I can't stop saying it. It's fantastic. Good old BPOP. We saw, initially, the write-up we had come in for us was that someone was loading up on protective puts, and they came in and bought 20,000 of the July 3 puts for 15 cents. And I looked at this name, and I just thought that didn't ring true to me. Someone was paying a serious amount of premium, about $300,000, to protect $6 million worth of stock. That's a 5% insurance
that
out to July.
Right.
Yeah, that's serious money. That didn't make sense at all. So I started digging through the numbers a bit to see what was actually going on out there, and then we noticed that there was some activity and some open interest on that strike from back in December. It was an opening short, actually. So it looks like this guy actually came out and had shorted that strike back in December for about 39 cents, and then was closing it out today, 20,000 times 15
Gotcha.
cents. So he made about his 25 cents on the deal. Then we dug a little more. We saw that same day on December, this guy closed out a short position in the Jan 2 half puts that expired back in January. He closed them out for 4 cents. So he's rolling his shorts. He rolled his short Jan 2 halves up to the July 3s, and he moved them out to there. So he sold that. Then you dig that back a little bit more, and it got even more confusing. So initially this guy, it appeared this guy had actually just done the Jan-July put spread, and then he had closed out the short leg of it today. But then we started digging some more, and we saw 20,000 of what looked like the Jan of 2012 3-half straddle going up. A short 20,000 times. And I was like, what is this guy closing out a short position and then legging into a short straddle in Jan? That doesn't make a hell of a lot of sense. But then it turns out this guy rolled his short July 3 puts up and out to the Jan 2012 3-half puts. He did those puts for, I believe, 49 cents. But it looks like there was an error on the trade, because if you go into time and sales, there's a canceled trade where it actually had him rolling from the July 3 puts.
Yeah.
It kind of shows people the first glance, and even some of our contributors who are very experienced in this, what they see at the first glance is actually not what's going on. And it kind of shows a lot of our listeners who see things at face value and see these 20,000 lot of puts coming up, think that this guy is putting on a very bearish position. It's actually quite the opposite. And it just shows, and also how bizarre to this day option volume tracking is still, with that 20,000 lot that got canceled, is still in the system as going up as volume today, which is odd. You don't see that very often. So anyway, just to round up that conclusion, pay attention to what you see when some of these numbers come up and some of these trades come up, because it isn't as first blush what you see, and it actually, you do have to dig a bit to get the true story. And the true story on BPOP is that this guy is rolling shorts, and he's rolling up and out with every time he does it, from the 2-halves in January to the 3s in July up to the 3-halves in January again. So it seems like he's doing pretty well on this one. So it's working out for him. You guys watch your BPOP at all?
You just wanted to say BPOP one more time.
Of course I did.
Yeah. I do like that song from the 90s. Beep-pop, ba-ba-doo-wop, shoo-ba-da-ba-doo-wop.
It's Bop. You stick to the 80s, Sebastian.
Yeah. Beep-pop, da-ba-doo-wop.
I was waiting for someone to bring that one up. I figured it would be Sebastian. I thought that might be Tim, though. You never know.
Well, it's all Tim's big fan.
Mark Longo, I just wanted to say, though, that, I really do appreciate that, how you do go through these trades, just the example on Bebop. Because, it's something I've picked up, from you and from the show and from Sebastian as well, even Tusaw. Because, it's something that I wasn't used to doing that, really sort of going through the whole chain and saying, okay, here's some large volume here, here's some large volume there, trying to figure it out. So, I just want to say I appreciate it when you do walk through those examples, because I'm paying attention.
So I'm glad someone likes it. We have an audience of one. It happens to be on the show, but at least people like it.
No, I think it's fascinating.
Yeah, like I said, it is just illustrative of what actually is going on out there, and some of the depths and the ways that the true intention of the paper gets obscured by the bizarre ways that options volume is tracked and counted today. And that's going to do it for today's Odd Block. 2 little ones, one very weird, one kind of straightforward. And we're going to roll right into the old Express/Spread Block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures, and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express/Spread Block. This is where we all, on the rest of the show, get to sit back and relax and take a bit of a break. Especially nice for me after doing all that talking in the Odd Block. And we listen to good old Tim Navabi, Mr. T-Knob himself, regale us with stories of action and adventure from the broker desk at Options Express. So, Tim, what stories of action and adventure do you have for us today?
Well, that's a very good question. And, not only was the Super Bowl in Dallas, but Options Express was in Dallas as well, and we were having a workshop there, and it was quite successful. We had a large number of prospects and customers who were registered, and just about all of them showed up. And I heard they had some pretty miserable weather down there in Dallas as well. So I just want to say that our Dallas event was a success. Some of the things that they went over, for example, they did some live demonstrations on the OX Mobile. They went through some order entry, as far as multi-leg trades and things like that, so that can get a little bit advanced for some customers not used to our platform. So it's always a big help when somebody is actually there walking through that trade. We also had some guests. I forgot my little cheat sheet here, but I know that maybe someone on the show has them. But we did have 2 guests. We had a guest from Investors Business Daily, and then we had another guest. I just want to say that, the workshops that OX puts on, I think they're always a good benefit. So, something to consider if we're in your area. And going to the markets now. As I was saying before, some of the movers were cotton. That was a big commodity mover today. Lean hogs, oats. Oats was up there. Wheat was up there. On the downside, natural gas, crude oil, rough rice, corn, cattle, soybean oil, orange juice, lumber, feeder cattle, cocoa, soybeans. So those were some of the commodity movers. As far as some of the trades that we were seeing or looking at, our analyst put out a trade in natural gas. He was thinking that it may have shown a top recently, and so he had put out a trade recommendation as far as selling some calls around the $5 strike. Some of the other things that I wanted to go over here real quick as far as what were some of the most traded stocks at Options Express. It's posted on our site, so if anyone's ever interested, really what is trading here, or what are these OX clients trading? SPY was number 1. Apple was number 2. The SPX was number 3, then the Qs, then Ford. After Ford, we had FFIV. So that's sort of new on the board. Haven't seen that one around there in a while, but I know it's had some action. Bank of America is up there as well, and finally GE. So,
Tim, I bet you in actual premium value, your that SPX that came in number 3 probably eclipses the rest of those issues combined, I would bet.
Yes.
Good.
I agree with you. Yeah, that's a nice point. Yeah, you're right. So as far as that trade recommendation from Mike, he was thinking about shorting some of the natural gas April $5 calls. His recommendation had it going shorting these naked, and he sort of kind of put in a risk level of about 480. He said he'd be willing to take the trade off if natural gas for April started to trade over 480. So, volume today I think was pretty light, and doesn't look like there's too much news tomorrow, if anything, or anything very exciting for the rest of the week. So, we may just kind of flip-flop back and forth here for the next few days. And that's what I've got here at Options Express.
Way to do an anti-tease for the Around the Block segment there. No one's going to tune in now. It's all done.
There's a few reports there that we could scrape on.
We'll find something to discuss, I'm sure. Well, thank you, Mr. Tinav, for that rundown of the Dallas event, as well as what's going on behind the scenes over at Options Express. And with that, we're going to close out the old Express block and roll right into the Strategy block.
The Strategy block.
And welcome to the Strategy block. This is the section of the show where Uncle Mike drags himself down from the mountains and away from his constant 24/7 reality TV crew for the Bass Fishing Channel. And he sits down with us and he tells us some sort of interesting or extremely appropriate or relevant options trading strategy. And Mike, this one actually sounds like an interesting one. I am intrigued by your tease, because I was actually about to mention to you when you said it, I was going to say, how do you incorporate the weeklies into your short strategies? I know you like to do a lot of short puts as limit orders and a lot of covered calls, and the weeklies obviously could add a tremendous amount to that strategy. So I'm curious to hear what you guys do over at Know Your Options Inc. with the weeklies.
We do a lot of things with the weeklies, but today what I want to go through is kind of what Mark Sebastian was bringing up with Apple. Now, not to make this sound too much like a Sally Struthers commercial, are you frustrated when your covered call premium isn't coming in like it is? Sure, we all are. But anyway, with that,
you sound more like that guy that wants to sell a $10 a tiny little ad in one newspaper that makes $10. And then
that's a good idea.
You put that in 100 newspapers, and guess what? You've made $1,000. It's unbelievable.
Wow, it's that easy. That's amazing.
It is that easy.
Wow. But anyway, where we are right now, we're looking at Apple, and we just got out of some of our February covered calls just because of the fact that it's gone through the obligation price. And so what we're looking at right now are some ways with which we might want to incorporate weeklies into our strategy. So if you feel options are too expensive, then consider selling them. If you feel options are really cheap, then consider buying them. That's kind of where we're at with what I'm about to present. And this is not a trade recommendation. I'm not sure if I'm even going to do it yet, but this is just an example that I'm coming up with for purpose of the show that does relate to Apple. And there's a couple of other tweaks with which we might add to it, and I still have to go through over the next couple of days as we're analyzing this. But right now, the February 355 call for Apple is trading at $3.50 by $3.55. And that has approximately 2 weeks until expiration. And I'm actually purposely using this example because I wouldn't do this exact trade because it's just too short of a time frame for the long leg that I'm about to mention. But let's go ahead and own 100 shares of Apple, and let's buy one February 355 call. We're buying it. So we're long 100 shares, plus we're long the 355 call. Now let's also take a look at the weeklies. Let's look at the February week 2 355 weeklies. Right now they're trading at $1.66 by $1.67. And so what we're going to do in this Fantasyland trade that I'm not going to do in real life, but I'm using just for purpose of example right now, we're going to sell two, not one, but two 355 weeklies. So with that in mind, we're going to collect approximately $3.30 of time value, of premium that we're bringing in. And so with that in mind, let's say that Apple stays below 355. Let's say it goes between now and expiration Friday, which is this Friday for the weeklies. Let's say it goes to 354.99. The ideal price for something when you're selling an option against it. Well, with that being the case, the 355 weeklies will then expire worthless. And come Monday, we will have 100 shares of Apple, just like we did before, and we'll have a 355 call option with which we're long at a very minimal price, 20 to 30 cents, just depending on what kind of a fill you got on this ratio spread that I'm talking about. So the first question is, well, wait a second, Mike, aren't you naked when you do that? Keep quiet, Sebastian. I'm going somewhere with this. No, you're not naked.
Hey, I'm clamming up.
You're not naked because the one call that you sold at the 355 weekly level is a covered call, and the other one is a calendar spread. So with that, you're hedged on the one short call with the stock. You're hedged on the other short call with the February monthly call. And by doing that, you're not naked. So in terms of the stock going to 400 over the course of the next few days, you don't have to worry about that because of the fact that you have the stock plus the long call to cover any losses or obligations, I should say, on the short calls. So with that in mind, let's say that the stock goes down in value. Well, if it goes down in value, then the 355 calls...
Well, we're talking about Apple. Why would we waste our time with that discussion?
Yeah, no kidding. There we go. But let's say for some odd reason it does go down. Okay. If that's the case, then the 355 weekly will still expire. There you go. Boy, I wish we could get some sound bites of some of your comments on Apple a couple months ago. But anyway.
I know. No, I I think we all know how I feel about Apple.
Pretty soon we're going to start talking about the Olive Garden too. But
anyway,
with that in mind, the 355 short calls expire equally worthless, and you still have 100 shares of Apple just like you had before, plus a 355 February call with 1 week to go at a very minimal cost. Now, let's say the stock does go up to 360 or 370 by the end of the week, and let's just assume that you take no action. If you take no action, then, well, Apple's trading at 352 right now, approximately 351.87. That's a 1% gain over the course of 3 or 4 days that you're giving up any upside beyond that. So, granted, you're giving up some upside, but you're still getting a profit in the process in doing so. So, what we're looking to do right now, let's say we were in a trade like that, one thing that you could consider doing, let's say Apple shoots up to, you did this trade tomorrow right at the opening bell and you got these prices, which you won't, by the way, but let's just say that you did, and Apple shoots right up to 355, you can buy to close the February weeklies and then sell to open perhaps the February monthly 360s and go from doing a 1x2 horizontal spread to a 1x2 vertical spread. So to kind of answer your guys' questions of what we're looking at with Apple and how we're dealing with the low volatility in this, we're still collared. We still have puts to the downside, but we're looking to add this as a potential tool to deal with the lower volatility and perhaps opportunities with Apple. Because if we can get a free 100 deltas out of the deal, we're not going to complain about such things. And that is today's report from the mountains on the strategy. Let's go bass fishing.
Mr. Tucson, never let it be said that you guys do not know your options over at Know Your Options, Inc. That's actually a clever one. I like that because one of the common inquiries we receive over at the Options Insider is, different ways to incorporate the weeklies into a premium selling or some sort of covered call or short put scenario. And the question we inevitably comes back to us that, is it worth switching to the weeklies as opposed to doing just front month because, is the extra premium you're going to collect going to offset your commissions and other things like that? And the way you did it there with the 1x2 with the stock, I think is an interesting spin on that, interesting recipe, you could say, for covered calls. I like that one.
Yeah, we're excited about looking at it. Haven't done it yet with Apple, but we got a couple of things going. We've done this a few times with SPY and some diagonal spreads when we've run into similar situations, but we haven't done this on the stock yet with Apple.
I imagine you can apply this to your other favorite then, Ford too, because they have the weeklies as well, so you can take the same strategic approach there.
Yeah, most definitely.
All right, Uncle Mike, thank you for that report from the mountains. And with that, we will close out the old strategy block and roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is the section of the show where we discuss what's on our own personal horizons for the next few market sessions. And if you listen to the earlier parts of the show, then good old Tim has spoiled it for you already, in that there isn't that much on the horizon. There are a few things actually that coming up for us. In terms of numbers, he's right. There isn't that much. We have jobless claims on Thursday, and that's pretty much the bulk on the economic front. In terms of earnings, there actually are some interesting earnings coming out this week that I at least will be paying attention to, and maybe some of you guys will as well. I know, Mr. Tucson, you'll be watching Cisco with me coming up on the 9th. We also have Activision on the 9th as well, another technology name. Good old Chipotle, we talked about them quite a bit. They're coming up on the 10th. So in terms of names that move, you might have some interest in, they definitely will be moving. But what are you guys watching for the next few sessions? We'll start off with you, Uncle Mike. What are you watching aside from Cisco?
Well, Tim pretty much said it. We're not doing anything. So we're just there. There's no trading going on. The markets are pretty much closed, if I'm not mistaken. Is that correct?
The celebration from Wisconsin was just too uproarious to shut down all the markets around the world. They knocked out all information technology everywhere.
I think I'm going to go long cheese futures then.
I think you missed your chance in that one, sir.
Yeah, we don't have anything specific that we're watching. Just what you had said with some economic news that's coming out. But right now, no specific earnings announcements or anything along those lines that we're paying too close of attention to at this point. So just watching our prices.
And good old Mr. Sebastian, you're watching, obviously, the Apple straddles. What else are you paying particular attention to over the next few sessions?
Unlike the last time we saw the VIX get this low, skew has not shifted downward, which makes me think that there are some people that are still kind of worried, at least somewhat worried about that downside. It's really kind of interesting. And not only has skew not fallen, but it's actually gotten less linear, if that makes sense. So downside puts are not only more expensive, but they get progressively more expensive in relative terms the further out you go, kind of exponentially. Normally it's just it's a lot more linear, if that makes sense. And it's been really incredible. As vol drops, we just see that curve steepen and steepen and steepen and steepen. So it's a little odd to me.
So let me just clarify then for our listeners. You're saying that the extreme tail end of the skew is turning upwards, as you might say, instead of being more of a straight slope, linear progression type thing.
Right. It's got in terms of the way we would describe it is that it has a lot of tilt and a lot of pump to it, and it creates imagine you have like a set of pincers or something that you're squeezing closer together. It's really interesting. So, I don't know where that's coming from, but I can tell you that there are a lot of people that are along this market that are definitely going for that downside. So, it's just something to take note of.
Well, as we inch higher every single day, I can't say I blame them. Eventually it has to turn around. I don't know when. I won't pull a Grigas and keep shorting every up day because that eventually will come back to bite you.
I sit right next to him, so I hear it all day long.
You might have to give that guy an advance on his salary for next year at this point.
That's true.
And
so, don't you want to know what's going on at OX?
I do. What is going on, and what are you looking at for the next few sessions at Options Express?
The next few sessions tonight, we have a very good webinar, a live event webinar. It's at 8:00 Eastern tonight. The title of it is the Gartley Trading Method Part 2, how to use proper money management with the Gartley pattern. So, anytime someone says money management, I'm always sort of listening. How can I lose less money? I will always listen to somebody try to tell me that. Not that I'm sort of hemorrhaging cash here. I'm just saying that, somebody wants to tell me about not losing money, I'll listen.
Yeah, that's good. At least you're not following Grigas down his dark path and just shorting everything in sight. Well, you know what? That's actually might be a record for us here on the option block in terms of wrapping things up quickly and succinctly. But thank you. Well, first off, that's going to do it for the Around the Block segment. And I want to thank all of our panelists for joining me today on this post-Super Bowl euphoric day for all of us Packers fans here. And starting off with you, Mr. Sebastian, what is coming up over at OptionPit.com you want to remind our listeners about?
Well, we just ended our Super Bowl special. We just, we're kind of mid our L3 prep class, our L2 prep class, which is actually, you can still use that coupon code OI 2011 to get that $100 off, and I'll hook you up with all those recordings. We've actually just posted our volatility video, which is a 4-part set of videos where I really get into how volatility works, how it operates, and I'm going to create a special coupon code for our listeners, okay, for this. And what it's going to do is it will take 20% off of the already low $249 for this course. And all you have to do, it's going to be OI Vol 2011. OI Vol 2011. I'll take 20% off the price. We'll bring it down to $199.20. So it's a pretty spectacular deal for this. I think it equates to, $20 an hour, some ridiculously low rate, when I charge $300 an hour. So think about that.
At that point, you can't afford not to buy it.
At $199, that price point is ridiculous. So, it will be it is, in my opinion, really just the best thing I've personally seen on volatility. Now, I know I did it, and I know I'm not modest, but I really did a good job of it. I did not mail this in. So, check it out.
That might have to be our Sebastian soundbite for the week as well. And then, Mr. Tusa, what is going on up in the mountains of Know Your Options, Inc. this week?
We got a bunch of things going on. This Saturday, I will be a guest speaker at the Options Express event in Minneapolis. So if you're in Minneapolis, stop on by. I would love to have you. We'll be talking on puzzle pieces, putting all the pieces together for the entire portfolio and using options for speculative, for hedging methods, and just all the different ways with which it can fit into the total picture. Sunday night, we'll have a webinar on the Greeks, and it is so eloquently titled, Meet the Greeks. It's all Greek to me. We're not doing Meet the Greeks, we're doing It's All Greek to me. I really blew that one on that promotion there. Sorry about that, folks. And then on Monday night, we'll have another webinar in our series on hedging a stock, whether it makes sense to hedge a stock, when it would make sense to just simply have a stop loss in it, and when it would make sense to simply not have a stock at all. And what we'd like to do for today, in honor of Mark Sebastian, I am running a promotion. We have something on our website, our free 18-minute portfolio review. And this is something that we're doing right now. It's where if you go to knowyouroptionsinc.com/free, it'll take you to the direct page. And what you do is you enter your first name, your last name, your email, and your phone number, and one of us will contact you, and we'll go over any positions with which you have and or are considering. It's an 18-minute portfolio review. Sometimes we go 19 minutes, folks. We use the 18 minutes as kind of a marketing thing. But for this episode only, in the first name box, what I want you to put in right after your first name, in parentheses, GMS. It's the Greasy Meatball Sandwich promotion. So, first name in parentheses, GMS. So that way we know that you are an Option Block listener.
I love
it. That's what we have going on for this week.
Mike, I've been one up to the nth degree. Unbelievable. I'm going to go do that right now. So.
That's fantastic, Mike. All of your promotional training and media training is paying off in spades. We can see it shining through. You're giving teases, you're doing promo codes, all sorts of great stuff. And I'm jealous of you two now that I don't sell anything, so I can't give out any promo codes. You can go get my stuff for free anytime you want. But Mr. Navabi, we heard what's coming on at Options Express. Anything else you want to add to that mix?
As far as anything else to add, no, not too much. If anyone has any questions or they want to reach me personally, don't hesitate to ask for me, or John or Rob. We're always available.
Now, can they ask for you by TNAV, or does it have to be, may I speak to Tim Navabi?
TNAV, so I'm sure they'll find me if somebody asks for TNAV. I don't think we have too many of those around here.
Why don't you just go ahead right now and give that extra personal level of service and just give our listeners your cell phone number and your home phone number, and that way they can get you 24/7 whenever they want. Mm-hmm. So when it's 3 in the morning and their bazillion puts are expiring worthless, they can call you frantic.
Mm-hmm. Well, my phone number at work is 888-280-8020, and my extension 6772.
There you go. Ask for the man himself. And ladies, don't be shy to call that number, because he will give you that extra special level of personal attention that you're so desperately looking for in your options broker these days. And as usual, you can always find all of the unusual activity, as well as a lot more that we don't have time to cover on the show, on the website, theoptionsinsider.com. Surf on over there and enter any promo code you want. They all end up the same. And with that, we're going to close out this episode of the Option Block. I want to thank all of you for listening and streaming and downloading and subscribing to this show. and we'll see you later on this week for another episode of The Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.